shut.
Okay.
My outside door.
All right. We're live, guys.
Hi,
All right.
everybody.
We're here to talk about the Grays. Ant,
Cool.
You doing good?
Yeah, this is Ant here. Thanks everybody for joining us. We've got Prairie Banana. We've got Zen. We might have Mando join us. We're not sure if he's going to be in the house.
Yeah, thanks for setting this up, Banana. Ant, thanks for showing up. Della, thank you for being here. I don't know if everyone's watching live, so we can give people a minute or two to roll in if you guys want, or we can just kind of go straight into it.
Yeah, we can kind of just get things set up, I guess. You were talking about.
If you don't mind, I would like to hear maybe Ant and Della, like how you got into crypto, why you're here, what are you trying to do with it, and then I can kind of relate that back to pTGC and my story and Banana's story as well.
Yeah, sure. Okay. Well, I used to work next to the guy who set up the first ISP in Australia, and he was a futurist and philosopher, and sort of social theorist and all that kind of stuff. And he talked about this thing called Bitcoin really early in the day, like within days of it being launched. And I thought, oh, I'll buy some of that, but never got around to it, which was a bit of a regret. Anyway, some years later, I get into crypto, and I'm here because of decentralization, as well as making great gains and changing, my life around it. So yeah, that's pretty much why I'm here.
That's awesome. Yeah, I feel like I love hearing that story because a lot of people within crypto have a very similar story of how they end here, in my opinion. A lot of them are trying to find a place to store value, at least where I live in the States. There is a decent amount of inflation on here. So if you don't have good places to store your value, you're constantly kind of working against the inflation of your currency. And actually, the United States isn't that bad compared to a lot of countries. So I'm kind of whining about it, but a lot of people have it a lot worse. And also, the ability to change your family's life, change your own life with these assets is also very important. So after I hear Della's and Banana, I would love to hear your story as well too. I can kind of rewind and tell you how I ended up here and, why pTGC, why UFO, and how they came about.
Mine is very basic. A dear lady introduced me to the group that I belong to now. And my motto is do what smart people do. I considered her smart, so I entered into our group. And then from that, I met other people who are brilliant as well. And so following those footsteps, I'm wanting to be retired. I have been retired over the last 4 years. And really, I'm after the freedom. My focus isn't on the figures. I want the lifestyle. I want to go into that. So understanding that crypto is the fastest asset growing class type thing, that's why I'm here. And I feel really strongly about the PulseChain system in that it's decentralized. I'm a huge freedom follower. I don't go the other way. So being decentralized and going forth from here, looking for long-term potential to hold and make money into my future is partly why I'm with pTGC, the Grays ecosystem.
Yay.
Awesome.
I love that. So I got into crypto in March 2021, right at the top of the last bull run. I got into all the, the classic tokens, Ethereum, Bitcoin, and several others. When I discovered Hex, I went all in on Hex because I could something in my mind. I didn't understand all the workings of it, but something was like, oh, this is it. This is amazing. And then I dollar cost averaged all through last bear market in various different projects. I landed in the Grays in the spring of last year, 2024. And same kind of thing when I'm like, something about this is blowing my mind. I can't put all my fingers on it, but
Yeah.
something here is really good. And thankfully, I got in, and I flipped some of my, I even rotated some of my assets into this ecosystem. And I have slides that I can show you where, I'm clearly up a number of X's against those tokens because I flipped into these assets, because these assets are an index of all the best tickers on the Pulse network. So, like anybody, I'm kind of getting ahead of myself, but anybody new to PulseChain can hold these tokens, and by proxy, they hold the best assets on the chain. There's my story.
Yeah.
Yeah, thank you for that, Banana. I'd love to kind of share my story a little bit, how I ended up here, how I became a founder of a token. It's a fully decentralized system, so at this point I'm the founder, but I'm now just a community member, just like everyone else. It's a decentralized system. It's autumn. Entire thing runs with or without me, which I believe is how to actually create the next kind of store of value. Very similar to Bitcoin, right? This is the goal, is to create the next large store of value that exists. My story is I've been pretty much working over full time since I've been 17 years old. Pretty much 4 years into working, I started my own business, and I was pretty much still on the business. I work this business every single day still to date. But 5 years into the business, I got the business to a size where I was like, you know what? I've reinvested all the value I've been making throughout the last 5 years constantly into this business. And I'm very happy with where I got it, right? I was happy with its size. I was happy with what it was doing, and I was comfortable with it. So I was like, you know what? Moving forward, I will take a portion of the value that I'm generating, and I'm going to start putting these things in some assets so some of my value can work for me, so I don't have to work for value as much, right? And a lot of the assets that I was finding were decent, right? Like I was having some stock accounts and some properties, and even some of the good, safe stock accounts on a good year is paying 10%, right? And what I found where I was living is the inflation was roughly at 10%. So even with my account doing 10% a year and inflation being at 10% a year, technically me saving my money was doing nothing for me financially. It was just helping me break even and hedge itself against inflation. So I realized really quickly, if I wanted to use my value to start getting ahead, you either need to put that in new businesses, tech startups, etc., or you needed to move it into a riskier class that could get you a little bit more price appreciation that hedges you against inflation. This is kind of where I got into Bitcoin and Ethereum, and that's where I started storing some value. And throughout that process, I started meeting a few people and learning more about decentralization, etc. And I was introduced to Hex. And I became very passionate about Hex because to that date, I really only knew Bitcoin and Ethereum and a few other mainstream products, but I was actually intrigued by building actual financial tools on the blockchain that were fully decentralized, right? This was a kind of a brand new thing to me, that these smart contracts could actually mimic some of the most successful real world assets and then just bringing it on chain to eliminate the. This is really cool. You know, when hard learn
Zen,
a ton
you're
from
breaking
Richard
up.
Hart.
Zen, you're breaking up a little bit.
Yeah.
Oh, sorry. So let me know if it gets any better. I might
It
take
improved
myself off
greatly.
Wi-Fi.
Just rewind like 10 seconds. Much improvement, though.
Yeah, I took myself off Wi-Fi, so let me know if it sounds a lot better or worse.
It does. Much better.
Yeah, so I went down the rabbit hole of Richard and actually spent a good portion of my time studying a lot of the videos he put out. He's a really good educator. He's giving out a lot of free education. And I was like, you know what? This is an amazing product. What other really cool financial products are built on the blockchain? And I start looking through many chains, many different projects, and really there wasn't a lot of good stuff out there. Even some of the stuff that was good already has VCs involved. The charts are only down because the VCs got good entry points. The token launched at higher prices than the entry points. Then early people just sell it down forever. It doesn't have much natural growth. Or there's a more natural growth project, but it just wasn't checking a lot of the boxes that I was looking for in a product to store my value. I was getting a couple of boxes here or there, out of my 10 or 12 boxes that I was looking to check, but nothing was checking all my boxes. So in my process of looking for great products to store value in, the value that I was working hard for in the real world, I was also kind of taking notes and saying like, okay, well, what made this product successful? What do I like from this product? What made this product fail? That's the nice thing about crypto being out for quite a few years now, is there's tons of data for us to work off of, tons of data for us to learn off of. So I kind of pretty much started to say, okay, I'm going to keep writing down what I like in a product, what I'm looking for in a product. And at the end of the day, if I can't find it, I'm going to start working on building it, because I believe there's something better out there that can be built for people who actually want store of value, sustainability, long-term holding, the things that I was really looking for. Me personally, I'm not really a trader, and I'm not in crypto for gambling, right? I'm not really into the meme coin, like day trading, gambling and stuff. I'm here to store value long-term and have it appreciate, hopefully a decent amount, and then keep it in the assets that I enjoy, support the assets that I enjoy, so on and so forth. This is how pTGC and UFO came about, is pretty much studying hundreds of different projects, many different blockchains, and trying to create an end-all be-all product to where we have the ability to do many X's, but also the features that create sustainability and longevity as well.
Okay, thank you for that, Zen.
Yeah.
I did want to mention that if you guys have questions, this is for the audience. Like, if you have questions, there are no dumb questions. Ask any questions you want. Because if you ask what you think is a silly question, it's just going to lead to some more conversation. Okay, like a deeper conversation, probably. So if you have questions, type them into the chat. I think if you're on mobile, you might have to do a click somewhere on your YouTube app on your mobile device. But if you are on a desktop, you can see this is us right here speaking. You just type your questions in the chat box right there, and then hit enter, and then we'll get the questions. Okay.
Awesome, Banana. So you're going to keep an eye on that comments to see if any questions come up for us? Yes,
I will.
Cool. Yeah, so that being said, we were talking with Ant earlier, and he actually brought up this very interesting point in the lifespan of pTGC. There is one point where I've been spending the last 2 years of my life trying to educate people on this product. It's a pretty complex product, but it's very simple when you break it down. There was someone that I was trying to, educate this product on, and I went onto this space and I pretty much told him, I believe, right now we have 2 years of data, but on this date, it was roughly only 2 weeks old or something like that. And I said, I believe I've actually figured out a way to mechanically make a token just go up and to the right, technically forever. That being said, there is going to be ups and downs because of the human interaction of the protocol, right? When people buy and when people sell, it creates high points and low points. Also, us being bonded to a whole entire blockchain, we get dragged up and down from that blockchain as well. That creates high lows and low points as well. But what I was mainly getting at is this protocol has a utility behind it that isn't based on human interaction, and it's driven by mechanical interaction. So a lot of people don't realize last cycle, it was a very DeFi utility-based cycle. And what a lot of people missed was all the utilities that were coming out didn't need to exist. So you're back at square one of any business. If you have a product or a service that you're selling, but no one is there that needs that product or service, you technically don't have a business at all. So people are just strapping these utilities or DeFi onto something for nothing. So what I did is the utility behind the pTGC and UFO system isn't actually dependent on the human interaction of needing the product, but it's only dependent on what the blockchain does naturally. As the markets move up and down, we generate revenue off of the market moving up and down, which is pretty much the only guarantee that the market can give you. And we take 100% of that revenue and bring it back to the ecosystem with buy-in burns, LP ads, and APY for holders. So if you take out, the fluctuation of the market and human interaction, we can actually use this mechanically driven utility to constantly buy up our token and raise the price floor over time. And that's what I meant by that statement that Ant heard, a year and a half ago or so.
Zen, we have 3 questions in the chat.
Let's go.
The first one is from OZ Hexagon. Was it your idea to burn the liquidity, or was it from pressure from other people in the space? It's an impressive commitment.
So I have a little bit of a different journey than I think a lot of other people that launch tokens. Is I wasn't an influencer or a large person in this space before my protocol came out. I actually built this protocol with not really having a social media presence. So when I came out with this product, I was technically an unknown person. So this was a way for me to show commitment and help build trust behind me as being a product or not a developer, but founder, and create a more trustless system. So users did not have to trust me to be benevolent with that liquidity, right? Because this product is meant to not be reliant on a single person. So by burning the liquidity in the system, it makes the system pretty much live on forever with or without a single person. So that was kind of the idea behind it. It had 2 reasons why. 1, being a decentralized system. 2, to also build trust being an unknown figure coming out of nowhere.
Thank you for that. 2 more questions, but before we go on to those questions, I want to mention to the audience, we want to do a walk through the D app and how you can interact with the contract at some point during this presentation. We're intending to do that, and then we also would like to go through a calculator. It's a bit of a moon math calculator, but it's a representation of what you can earn for yields, and we definitely like to go through that. Are we tracking good? Ant and Della, how are we doing?
Yeah, I think we're doing good. I think let's make sure that the people who are newbies and maybe not even holding the token, we can get them up to speed, and then maybe ask them more technical questions or answer the more technical questions later once they've got up to speed with stuff.
Okay, sure, we can do that. The next, if you don't mind, if you could just kind of guide the count, just if we're getting off track, if you want to just get us back on track, Ant, I'm not opposed to that.
Yeah, sure. Well, I would go to the slides and just make sure that everybody's up to speed with what it actually does, and the very basic stuff, how to purchase the token, how to stake it, why you'd stake it, staking versus not staking.
Okay, we'll talk about that in the DApp.
Yeah, great.
Okay, Zen, this other question is how tightly, no, let me read how it's read. How is it tightly coupled with Pulse? What's the mechanism which drives the price upwards with Pulse asset going up?
Yeah, so in basic, pTGC and UFO are both indexes of the blue chips on chain. So you can just hold pTGC and UFO, and you are actually directly correlated with the growth or loss, right? Currently on PulseChain, it's actually a loss, but you are directly connected to the growth or loss of the things we are connected with. So by holding pTGC and UFO, you automatically get the value growth or value loss of the assets we are connected to. This includes Pulse, PulseX, Hex, Inc, Most, Pump, Bear, and even tied to some other large assets like Ethereum and Bitcoin as well. But how does it work? A lot of people don't realize that everything in crypto is all ratio based. So I like to explain it like, imagine pTGC was 1-to-1 with PulseChain, right? So 1 pTGC was worth 1 PulseChain. Let's imagine PulseChain went up 2x in one day. Automatically, pTGC would go up 2x in one day too, because it's all just ratio based. It's 1-to-1. So what we've actually done is created a system that is so heavily bonded with assets we think will perform well. This is the index of the whole entire chain. As those assets move up, we automatically get those X's due to our sustainability, our longevity, and our reason to exist on chain. A lot of protocols actually don't move with the blockchain when it's moving up and down, because 99.9% of projects that launch do not need to exist. A lot of people don't even realize 99% of the projects that do launch on chain are actually there to extract value out of your wallet into their wallet. So when you get into crypto, that's the first thing you need to realize is 99% of any crypto that's launched is actually to get the value away from me, not bring value to me. Hence why you don't really see this happening all the time. But when you actually find a sustainable system that has longevity, utility, and a reason to exist, you can actually see it working off of the X's of the blockchain it's built on, and then also the other assets it's connected to. My best example that pretty much no one even realizes is, if you know what Hex is, last cycle Hex did a 10,000x. A lot of people don't realize roughly a 10x out of that 10,000x came from Ethereum. So Hex actually only did a 1,000x, but since Ethereum went up 10x during this time period, they're able to multiply the 1,000x that Hex did by the 10x that Ethereum did, and that's what created a 10,000x. I actually named this the X multiplier because I've never heard of anyone talk about creating gains in this way ever before, so I had to kind of create my own name for it. Richard actually calls it reflexivity also, but it's when, and we'll go over this in the future, it's when you have two assets that are bonded together that both have good sustainability and longevity, you can take the growth of, let's say, the blockchain you're built on, PulseChain, and let's say PulseChain does a 10x, and then pTGC does 100x against PulseChain. If you were holding pTGC, you just did 1,000x. This is called the X multiplier. Pretty much no one in crypto even knows this exists, right? So just knowing this information gives you a huge leg against most of the people. And this is how the pTGC system is actually able to do a lot of X's in the future, even with very large amounts of liquidity. And we'll go into how we're going to actually maximize this feature to get X's, to get very large liquidity. You'll be blown away by the numbers when we run into it. And then very large volume, which very large volume in our system equals very large value generation.
All right, the next question is from OZ Hexagon. He says, can you adjust the buy and burn depending on the market, or is it automated? I think people care much more about X's in a bull market and care more about yield in a bear market. Well, I can tell you that we cannot adjust the burn depending on because it is automated, except for what goes to the DAO, and I'll let you explain that, Zen. But the 5% transaction fee, part of that it burns tokens, and you can't change the fee. It's the contract has been renounced. None of the fee structure can be changed.
Yeah. So thank you for bringing that up. So this is a fully decentralized system, and it's renounced. So everything that's written in code can't be adjusted. For me, that's really important. Some people don't mind things being adjusted later on. For me, for long-term value storage, I don't like the game changing for me mid-game, right? I think it's important to know the rules of the game and know what you're putting your money in before you put it in, and it actually be put to a point to where it can't be adjusted after you're in the system. That being said, pTGC does have decentralized and automated ways to actually pivot with the ever-evolving crypto industry around it. So just like I think you said OZ Hexagon was saying, the ecosystem of crypto is always evolving. It's evolving via the cycles. So, at high points, it makes sense to get stables. At low points, it makes sense to get into the gas token, right? Another example is we have no idea what crypto will look like 4 years from now. So a lot of people don't realize that most tokens don't last multi-cycle because we don't even know what next cycle is going to look like. And if you can't know what's going to be in the future, how are you supposed to code a fully decentralized and automated product around that, right? And others will leave open doors and stuff like that, but usually those open doors always create issues in the future. So what our solution was in our ecosystem is there are portions of the value that gets generated that goes to certain places that can't ever adjust, right? Every single transaction adds 0.5% of the fee or 0.5% of the volume to an automatic buy and burn, 0.5% of the volume to automatic LP add, 1% of it goes to pTGC holders, and 1% of it goes to pTGC stakers. So if you're a staker, you earn both holding and staking. So you're earning pretty much over 100% more APY. And then 2% of the volume goes to the DAO. And what the DAO actually creates for pTGC, and again, the DAO is automated and decentralized. It's not owned by just one wallet, which is important for longevity and sustainability and decentralization, in my opinion. But what it does create is a decentralized way for our ecosystem to not pivot with individual cycles or even micro cycles that happen within the 4-year cycle, but also pivot with the industry that's evolving constantly. So, for example, PulseChain. We do not know what PulseChain is going to look like 4 years from now. I bet if you asked a Hexagon that's been in Hex for 4 years, they didn't think Hex would look like it would right now. You know, the inflation or the APY has been cut drastically. Price is currently down. PulseChain is, you know, what PulseChain is right now. There's been Pump.Tires launched by supposedly, in quotes, Richard Hart. So the environment we're in now is what no one would have imagined 4 years ago. The environment that will be in 4 years from now is not going to look like what anyone thinks it's going to look like. But what the DAO gives our system is the way, in a decentralized manner, to adjust with whatever hurdles or opportunities are constantly thrown at us. And yes, that can switch from LP ads to buy and burns to marketing to adding new great pairs to our liquidity web, which is our index of our assets. It can go to storing value in stables to capitalize in the next bear market. So that's one of the strategies after this bull run that will be implemented to conserve value and spark the next bull market for our ecosystem, is storing value that we're generating in stables. So when we find we're close to the next bottom, we possibly could have millions of dollars in value to inject into our system at cheap prices, buying and burning pTGC at lower prices.
Harshal, go ahead, Ant.
Yeah, so I think that's a good sort of synopsis of all of that. So in a nutshell, we've got a renounced contract, so you can't make any changes, but you can tweak the way the system works if there's a badly performing asset that it's paired to or linked to, or we can add a better performing asset. So I think this is what happened with the whole PDI story a few months ago, right? There were some changes that were made because there was some pairing happening with PDI, I think.
Yeah, so some of, like, a good portion of all our RH tickers are burned, right? We believe that was a safe move due to there being a very high possibility that the RH tickers are not going anywhere on his blockchain. Also, there is a portion of our PDI liquidity that is burnt, and that's still there to date. But then there is a portion that was not burnt. And there is a portion of our liquidity web that isn't burnt as well, just in case there is things that we need to.
We just lost you for a second there.
Can you hear me?
We can now.
Okay, sorry. Yeah, someone was calling me. So there is a good portion of our liquidity web that is not burned, and that gives us the ability to adjust it if, in case, you know, a project isn't doing what we thought it was, it isn't a blue chip on the chain anymore. Also, we do have portions of our more riskier plays that we do plan on closing down when we feel like we're further along in the bull market, and we can rotate some of that liquidity to stables so we can help anchor ourselves to higher prices with stablecoin liquidity. Right now, it doesn't make sense for us to have stablecoin liquidity because we believe we're close to the bottom of PulseChain. So we wouldn't want to anchor ourselves to low levels. But later on in the market, you know, let's say we're up 20x on PulseChain, right? At that point, it would make sense for us to look at some of our liquidity pools that are more risky that we don't believe could be multi-cycle and de-risk from those a little bit, and then put some of that value in stables to help anchor us towards higher levels. So the liquidity web isn't fully burnt. So parts of the liquidity web does give us that ability to pivot. But then also what we can also pivot with is the value that we're constantly generating. So with every single transaction, every single day, we're generating revenue. For example, today, I bet you the pTGC system has generated around $10,000, let's say. Well, 4,000 of those dollars is going to the DAO. So our system has $4,000 to constantly pivot with just in the last 24 hours. If that's going to buy and burns, if that's going to LP ads, you know, or if that's going to a form of marketing, saving it, you know, so on and so forth.
Okay, cool. Well, let's talking about pivot. Why don't we pivot from the interesting sort of how it works in the background stuff right back to the basics, so that we can get anybody here up to speed on how to interact. What's the best way of using this?
Okay.
Really simple terms.
Okay. The way I see this unfolding is we have at least 3 sections to go to. I'm just saying this for everybody. We'll walk through the DApp. I think, Ant, you're implying that we walk through the DApp right now. That'll take maybe 10, 15 minutes. And then we can go through my slides, 15 minutes. And then we'll end out, or whatever. We'll go through the moon math calculator, probably take 10 minutes. So we're looking at like 40 minutes for the next 3 sections. You know, barring, you know, but the audience is still welcome to put in questions in the chat.
Yeah, brilliant. I'm gonna mute my mic and actually turn my camera off just for a couple of minutes, but I'll still be here.
Okay. Sounds good. So Zen, I'm going to bring up the DApp. And this is Pulse, is for you guys. You can go to it, pulsetgc.com. I'll put it in the comments. pulsetgc.com. That's where you can interact with the contract, connect your wallet to the DApp. And it's safe. I've used it a ton. Everybody's used it a ton. And then that's where you go to interact with the contract. So let me get it pulled up here. And we will just walk through how you can. Okay, let me back up. There are 3 things that you can do with your pTGC once you hold it. You can continue to hold it and earn reflections. You can stake it to earn staking rewards in addition to your reflections, and then you can lock it to earn locking rewards, staking rewards, and reflections. And you can set all that up right here on the DApp. So feel free to comment as I go through this, Zen. So
yeah, I think an important thing to just look at with that system, right, is if you are someone who doesn't like to interact with dApps and you don't know how to interact with smart contracts on chain, because this is all on chain stuff. So if you don't feel comfortable with using dApps, you can always do all these things on chain. Just a lot of people in crypto don't know how to do that. So we build front ends to make it easy for users to do that. This front end's been around for almost 2 years now. But,
yeah, that's a fair point.
Yeah. But if you don't feel comfortable, you can literally just hold pTGC and still earn pTGC. The token itself is technically a miner of the value generation that gets generated by the pTGC machine. So by holding pTGC, you earn more pTGC every single day. It just drips right into your wallet. If you are someone who does want to earn additional APY, you're more of a long-term holder, you are okay interacting with dApps or the smart contracts, you can stake your pTGC. You can remove that stake at any time. It's a 1% fee when you remove that stake. So keep that in mind. It does not make sense to stake for a week and then remove the stake. You won't earn 1% in 1 week. But if you are a long-term holder of pTGC and you want to earn additional APY, you can stake it. And what I've found is you're earning roughly 130% more APY for staking. Even though you're earning both 1% of each, since there is less people staking than locking, it actually turns out being more than 100%, if that makes sense. You're just sharing the pie with less people, technically. You can also go a step further and lock your tokens after you staked. So staking, there's no time constraints. Some people do like time constraints to their long-term assets to protect themselves from their worst enemy, themselves, right? With tokens that die off, this isn't really a big deal, right, yourself. But with things that are actually the needle in the haystack, the long-term sustainable assets like Bitcoin, like Ethereum, the things that actually last multi-cycle, you'd be surprised how many people can't actually keep their hands off of their tokens naturally. If you go back to Bitcoin, right, this is the best example. It wasn't so much about how early you found Bitcoin. It was if you were able to hold it long enough, right? Think about how many people sold all their Bitcoin after a 5x instead of letting it do a 500x. So what we found is we could actually, in code, give users a way to protect themselves from themselves while also earning an additional APY. So they're actually incentivized via code to protect themselves, right? And this is the idea that pTGC is successful long term. Not everything is successful. This is crypto. It's a very risky asset class, but we believe this asset is the needle in the haystack. We want to protect users from themselves, and you can actually interact with the code, lock your stuff up long term, and earn additional APY for doing so. There is very smart ways to go about doing this to give yourself less risk. And I'll let Banana kind of go into this via ladders or sectioning off your locks to help yourself with locking.
Okay, so we're just going to unload the wagon here on this section right here. We'll give you guys everything that I know about this system, and if I forget anything, Zen, feel free to jump in. So you can hold your tokens like Zen said, or you can stake them. The way you do that is you hit the stake button right here, and you can commit and stake as many tokens as you want. And then you hit confirm, sign it in your wallet, and you will have staked tokens. And then you'll start earning rewards. These rewards are going to be sitting in the contract until you claim them. Oh, by the way, there's one stake per wallet, and you can continue to add to it with these rewards. You can do anything you want with these rewards. You can put it back into your stake. You can make a lock with it, which we'll talk about, or you can take them home for profit. It's your tokens. But they're going to sit here in the contract until you claim them. When you claim them, they'll go into your wallet and start earning reflections themselves. Now, if you wanted to, like Zen was saying, if you wanted to withdraw your stake or end your stake, you would select this button here, and then you can actually end as much as or as little of a stake as you want. And there's no time commitment on these stakes. But when you do, you're going to pay 1% fee, which goes to all the other stakers. And then OZ Hexagon made a valid point in the chat. He says you need to stake for about 3 months plus to make the unstake profitable. So, just bear that in mind if you do decide to stake. I stake my tokens immediate because I'm a long-term holder, and I'm sure I've ROI'd on mine. Now, the third thing that you can do, and I'm going to explain the difference between reflections and staking rewards versus locking rewards. And this is going to help you with a misunderstanding, OZ. I'm not being unkind, but I see your comment there. Wait till we look at the moon math calculator, OZ. I'm challenging myself to change your mind about that. Not being unkind. We're just saying it out loud. The third thing you can do is you can lock your tokens. Now it's a big commitment. I would not lock tokens without sleeping on it at least one night. Talk about it with your spouse, take a few weeks, whatever it takes till you understand what you're doing, because the penalty to early end your lock is 30% of your principal. Now you could be up a number of X's to where it would be worthwhile, but you're still going to nuke 30% of your principal, which goes to all of the other lockers. So it's a heavy hit, big commitment. There's a locking ladder. I do not have a slide for it in this deck. The ladder, the minimum is 90 days. 90-day lock, you keep 55% of the unlock rewards. 45 when you claim your tokens, 45% gets sent to the dead address, reducing the supply. So you can lock up your tokens for 90 days while you think about how perhaps you want to build a ladder or something like that, or how much longer you want to go. You commit to going longer. Let's see. So yeah, you can have multiple locks per wallet, one stake per wallet, multiple locks. Your tokens have to be staked in order to be locked. And then in reverse, if you want to unstake, well, if they're locked, you got to unlock them first. And then just like the staking rewards, your rewards for locking can be claimed at any time. And again, they're held in the contract until you claim them, sign it in your wallet, burn a certain amount. Unless you're in a 10-year lock, If you're in a 10-year lock, you keep all the tokens, and the amount that you keep is graduated from 90 days, 1 year, 2 year, 3 year. If you lock one day into the next year, you're earning from that year. Let's see what else.
Oh, yeah, I think that a few key points on it, right, is the APY that you receive from staking and locking in our system specifically is claimable to your wallet at any time. You do not need to fulfill or close down your stakes to access the APY. The APY is designed to be the passive income for you having, you know, a portion of your portfolio or your investment in this ecosystem. Then you get to make the decision, do I want to compound this into my stake, or do I want to create additional locks, or do I want to just hold this liquid, or do I want to take some profits and enjoy a day with my family, and so on and so forth. Another thing that is unique about our system is you keep 100% self-custody of your assets when you're staking and locked. So most other projects, when you stake it, you're actually giving up your tokens to a contract and they're paying you an APY in return. What this creates is a huge opportunity for a hacker to get at that smart contract and takes everyone's money. So we've designed our system that when you're staking, it actually remains in your wallet. So you have self-custody of your assets the entire time. And for us, this is great because we actually plan on being multi-cycle, hopefully we'll get into the numbers, but let's say getting into the top 50, top 25 of all cryptocurrencies. If everyone's staking was in one contract, this would be a huge issue. There could be possibly billions of dollars of tokens in one contract somewhere. That creates a huge, like, hey, look at me to hackers and stuff. But by spreading the value amongst everyone and they hold it in their own wallet, it actually makes the asset safer for a long-term store of value if we get to these huge asset class numbers. So that's just a small example of us forward-looking and building a safe product for people to use. Most people have you give up your custody to earn APY. We actually made it to where you keep 100% self-custody while you're earning the APY.
Yeah, and a cool little side feature of, because the tokens stay in your wallet when they're staked, is that because malicious people have gotten a hold of other people's wallets, and they see the tokens of pTGC in the wallet, but they can't transfer them. And they try to transfer, they can't. It's because they're staked. But, you know, being who they are, they don't understand how the contract works. Jose Hexagon brings up a very good point in that transferring, and I've got bit by this too, Jose Hexagon, several times until I learned so there's a fee. The fee is on every buy, sell, or transfer. So buy the tokens from the wallet you want to keep them on. Otherwise, you tend to nuke, 5%. Okay. Key differences between reflections, staking, and locking rewards. Reflections and staking rewards come into our wallets based on the price of the tokens today. The locking rewards do not. Very different. Okay, these are also contract dependent. Like every time there's a buy, sell, or transfer, we're receiving rewards for holding and staking, and it's based on the price of the asset today. The locking rewards are human dependent. They're depending on humans to early end their locks. And, we see lock-in rewards. Sometimes we'll go a number of days without any lock-in reward. And then there might just be a smidge that comes into our wallets. But then we'll have an enormous day where there's a lot. It's very sporadic. But the lock-in rewards come into your wallet, not based on value of token, but on quantity of token. So those tokens could be worth any number of, X's, for example, from where the value is today, but you're going to get a certain number of tokens. So we liken the locking in pTGC to a superpower, and we speculate that going into the cycle, as price goes up, the lock tokens, the locks, we think are going to be lucrative, because let's say, for example, your daily yield for holding and staking is, just based on this volume, or I have a low volume right now. Let's say you're making $5 a day on reflections and staking rewards. Well, if we let's say we 100x And now you're still making $5 in volume. Let's say the volume's the same. You're still making $5 for your holding and staking rewards, but then your locking rewards would be 100x from where it was when you started. If that makes
I
sense.
think the biggest thing is the reflections and the rewards for holding and staking are volume based, so they're based on the volume of the ecosystem, but the locking rewards are just based on people early ending their lock. It has nothing to do with volume. It just has everything to do with how much those users decide to unlock, at that time.
Right, and that's one of the calculators that we'll look at when we get to the moon math is the locking calculator. It's my favorite. I'm a big fan of the locking. All right, is there anything that you think we should cover on the D app, Zen?
I don't know if let's go through UFO really quick. We're definitely not going to go into it.
Okay.
So in the pTGC system, there's the gray system. There's two tokens. There's pTGC and UFO. pTGC is very much modeled off of a single-sided staking system, very similar to like what PulseX was going to be, if you know that system, when it had single-sided staking on the roadmap, to where you take the asset and you single-sided stake it, keep 100% self-custody, and you earn APY just for helping hold the asset price up. UFO is a little bit different. You can just hold UFO and earn UFO. So you do not have to participate in the liquidity farm to earn APY in the UFO system. You can just hold it. But some users who do like LP providing do use the UFO farms to earn PLS rewards. And what they're doing is they're liquidity providing via our smart contracts, and they're earning the standard V2 liquidity providing fees that you would get in normal PulseX liquidity providing, but then they're earning an additional PLS reward for doing it within our system. And Banana can pull that up real quick and show everyone how to use it. The interesting thing about it is a normal farm is built around giving a DEX value, right? They're incentivizing people to add LP on their DEX to give their DEX volume, give their DEX users. What our farm is designed around is not giving a DEX value, but giving a specific token value, which is the UFO token. So the entire farm is actually built around giving UFO value and giving pTGC value. When a holder wants to get involved, the first thing they need to do is buy UFO, right? This helps the UFO price. They can either hold UFO and earn UFO, or they can take it a step further and say, hey, I'm going to LP provide for the UFO system. And when they LP provide for the UFO system, they're actually contributing the other side of the liquidity pair to the liquidity web of UFO. So now that value is working for the pTGC and UFO system, generating revenue. The UFO LP provider, this user, is earning PLS as their incentive for doing so. So the system is actually creating a symbiotic relationship where it takes care of the user because the user is taking care of them. So the user gets paid PLS. But the user is doing more than just adding to the liquidity web. He's increasing value via his PLS rewards. He's also backing the UFO token by even more value. So a lot of people don't realize this. UFO is only roughly a 20 million market cap token and has around $9 million in liquidity. So as far as market cap to liquidity ratio, it's massive. Most tokens would say that this is too much, but what's unique about our system is we use our liquidity to generate revenue, where most tokens liquidity is just like money sitting in a cash register for users to go in and out of the protocol. But every single amount of value that sits in our system is actually revenue working or value working for us. And then that helps generate price appreciation for our protocol, pay APY, etc. That value that's there in the liquidity web is also buying and burning pTGC. So it's also supporting pTGC's price, and it's also buying and burning UFO as well. So it's also buying and burning UFO's price, helping with price appreciation there as well, giving the user incentives to hold even longer. If you have a deflationary asset that constantly has demand and price is appreciating, and that asset's paying them a constant APY, it actually incentivizes those users to stay long-term, hold the asset, and this is one of the most important things for a long-term sustainable product, is you want incentives to hold long-term. So You can run through that DAP real quick. I just know we're kind of running out of time, so I'm trying to move fast.
Yeah, I'm just going to jump in here, guys. We've got the chat that's going on in the presentation here, which is great. I've got messages coming through from some of the group who are in the call, but they're not commenting in here. So we've got a broad range of experience here. We've got some advanced users. We've got some really basic newbies. And some people are finding that it's a little bit too advanced in some of the concepts, and we need to sort of get the basics in really basic terms across to people.
Okay.
So basically try not to blow people's minds too much. We don't want to turn them off.
Okay.
Yeah.
Well,
one of the main things, and we'll kind of rewind back to this, is the very basics of what this protocol is it meant to be an easy button if you want to be exposed to PulseChain, right? By just holding this asset, you're actually exposed to the majority of the blue chips on chain, but all the value that's within this ecosystem is working and generating revenue, and it's making the supply deflationary and paying you APY. So when you're exposed to pTGC and UFO, you're exposed to all the blue chips, but you're in a deflationary asset that pays you for holding it. It's a very simple idea, and that's kind of my easy button term, but I just kind of want to put that out there real quick before Banana keeps moving on.
So a comparison could be that this is an ETF of the PulseChain system, plus a bonus.
Yeah, so the idea behind that really was, and I kind of was talking about this a little bit earlier, is on the design of pTGC, I was studying like hundreds of different crypto projects, seeing what worked, seeing what didn't work, and taking out the didn'ts and adding what did work. But another thing I didn't really tap into, what I was also studying, is what created successful products and what were some of the largest financial assets in the world, studying those and seeing what gave those value, what made them succeed. A lot of people don't realize one of the biggest sectors in finance is indexes, right? People love the idea of by holding one, you hold all. So this is very similar with pTGC and UFO. This alone is a lot of product market fit of the asset, is you don't have to get into PulseChain and figure out, okay, what is the top tokens on chain? I don't really know. I need to spend hundreds of hours to actually figure it out. You can actually just come to PulseChain, get into pTGC and UFO. You're exposed to a fully deflationary asset that pays you APY, but also exposed to like 20 other assets at the same time.
Sorry, I was muted just then. Hence the discussion I've been seeing on X over the last few days of people saying, maybe I'm just going to rotate all of my pulse into pTGC.
Well, there is an argument for that.
Yeah, I mean, I'm not saying that's
definitely not suggesting it,
but there's logic in that argument.
It's so the risk of that is there's the chance of you being in pTGC, Pulse going up, and people selling their pTGC in the Pulse, right? That's really the only risk. If no one sells or buys pTGC, they're directly correlated, right? If Pulse goes up, pTGC goes up. So what you have to then kind of start looking at is when value flows on chain, automatically that value has to go to Pulse pretty much first. This is the gas token of the chain. This is how every blockchain works. We automatically get our price raised from that. But then you have to ask yourself, when value flows in, is more value going to flow into pTGC, or will more value flow out of pTGC? Naturally, what happens when value is flowing into risk on assets, it usually is the case, and we have 2 years of track record to go off of, is value flows into pTGC because value is flowing on chain. And then that's our X multiplier over PLS, because we automatically got the gains from PLS. And if just a small amount of that value trickles down to pTGC, we actually get to multiply the X's that we did against it by the X's we got from it. And that's why it's very easy for us to do a 50X when PulseChain does a 5X, because we're multiplying off of it. And what's unique about our system is when value starts flowing into PulseChain, every asset's getting the X's from PulseChain moving up. But even if the value doesn't make its way to pTGC, let's say it goes to Hex. Well, we're heavily bonded with Hex, so we're automatically working off of an X multiplier there as well. We're also heavily bonded to pDAI. So if value flows to pDAI, we get value there. So it really, if it goes anywhere that's in our web, we get price appreciation from that. I kind of look at it like, by holding pTGC, you're actually betting on PulseChain as a whole. And if any of the individual sectors win, you actually get to win as well, because if the P copies become a narrative on chain, we win. If the RH cores are the only thing that wins on chain, we win. If the pump.tire system that Richard launched wins, we're heavily bonded to that, we win, and we generate revenue off of all those wins. That's what's the strength of having a diversified portfolio, is you're kind of looking at, hey, these could all be winners, hence, the stock index. This is just brought to blockchain. By holding one, you hold all, and it creates a diversified portfolio in a decentralized manner.
Okay, I want to answer this question, and then we'll get to the DApp, and then we'll run through my slides. Question: as soon as a person stakes, example, for 3 months, does the system immediately lock the tokens? No. I thought the two were separate. They are. So the person has to unlock the button to reuse what was. Well, if you do lock your tokens, you got to unlock them once they're mature, and then you would need to unstake them also if you wanted to unstake them.
Yeah, and just to bring up, just for everyone listening, when you are locking pTGC, let's say you fulfill your time period, in this example, 3 months. After you hit your time period, you do not need to unlock. You can remain in the lock forever and never be penalized and continue to earn. You will only earn in your tier, though. So just because you stayed locked for 2 years, it doesn't mean that you go up to the 2-year reward system. You still remain in the 1-year reward system, but you're not penalized at all.
Yes, that is true. Okay, the explanation for UFO is much simpler than pTGC, because you can do 2 things with UFO. You can hold the tokens, or you can LP them. And this is where you go to LP them. Same DApp, pulsetgc.com. You select, let me get rid of this comment. You select add liquidity. I'm already there. Yeah. You select manage pool, add liquidity. You have to add equal sides. Select add new liquidity. Transact it in your wallet. And then once you're done transacting in your wallet, I always recommend going back to click on this button here, UFO token, and select UFO PLP rewards, because I want to go see that LP. And I'll click on that. And then you should see the LP that you created once it populates. And you can see that there's one right here. This is a UFO PLS LP. When you hold tokens, you will earn, when you hold UFO, you will earn UFO. And here is the UFO that this wallet has earned. When you LP, you will earn PLS. And here's what this wallet has earned, PLS. Okay. Any other comments on UFO, Zen, before we go to the slides?
No, I don't. I would like to hop over to look into pTGC real quick, because I feel like there's a lot of basic information on there that's nice to go over.
Okay, let's do it. You want to go to the start on the dashboard?
Yeah, I just want to sit on the dashboard for now.
Okay.
So just some of the data on pTGC, and it's not too advanced, that stand out. You can see how much pTGC has actually been burnt in the last 24 hours via the automated function. I can't see the numbers, but it looks like $3,700 has been bought and burnt. So this is what we're talking about as the ever rising floor. The code actually is constantly buying itself every single day. It doesn't need a user to technically buy up the asset for price appreciation. The code does it automatically. The amount of buy and burns it's done to date is up at the top, and it's currently worth how much value has been bought and burnt to date, Banana? I can't see it.
sorry, I was muted. 18,500,000 dollars of the supply has been burned.
Yeah, so that kind of shows what that equals over a long term. pTGC has been out for almost 2 years now. $18 million of the supply has been bought and burnt. So what that means is that's technically a user who's bought the supply and just destroyed their tokens, got rid of them, sent them to the dead address, can never sell them in the future. This is happening with every single transaction that happens within our system. Okay, scroll down if you can. I also just want to show real quick the amount of value that's been generated in the last 24 hours, Banana, and where that went. And this is from human interaction and market maker interaction, the utility of the protocol. So both humans and market makers pay the fee system, and that fee goes 100% back to the protocol. So in the last 24 hours, we have generated $13,000 with pTGC. And then down below, you can see where that $13,000 went. $314 went to automatic buy and burn. $314 went to, oh no, sorry. Can you click over on the 24-hour, Banana? Thank you.
Sorry. There you go.
$1,313 automatic buy and burn, $1,313 automatic LP ads, $5,254 to the DAO. So that's what gives us the pivotability to where we can decide as a decentralized autonomous organization, do we want to do buy and burns? Do we want to find different LP pools? Do we want to pair with stables? Do we want to just store value in stables and wait for the dip? And then we have $2,600 going to holders. So your percentage of the supply is your percentage of that holding reflection, and then $2,600 to stakers. So your percentage of the staking supply is your percentage of that. Then you can actually see the amount of value we've generated in the last 6 months is over $3 million. So in a small scale, when you look at it 24-hour basis, $13,000 doesn't seem like too much, but throughout the last 6 months, adding that all up on the daily basis, what it equals is over $3 million of value generation. And that's value generation with no overhead. So since this is fully decentralized and automated, we have no employees, we have no buildings, we have nothing. It just 100% gets to go back to the token holders and the token price of the asset. The cool thing about this is within this last 6 months, PLS hasn't even been at SAC price. So what we have is currently a very suppressed machine. We personally believe PLS will have success, will be far over SAC rate. And since a lot of that volume is mechanically driven, as PLS goes up, as we go up, we can actually mechanically increase our value generation pretty evenly with the X's of the blockchain. So for an example, if the average pulse price is roughly 10x than the average right now, instead of us generating $3 million in 6 months, we can be more at $30 million in 6 months. And that's just a 10x from here, right? A 10x from here is not even the all-time highs of PulseChain. If PulseChain was to do 100x from these levels, which is pretty much 30 times SAC price, which isn't crazy. A lot of people think PulseChain could do more than 30x SAC price. Most blockchains have done hundreds of X's past that. Well, what we could be generating, because a good amount of our volume is generated through mechanisms, is roughly $300 million in 6 months. That would create roughly $600 million in a year, and that's just pTGC. You can then drop down to UFO and add that together, and that's the amount of value generation our system could see mechanically with a successful blockchain, right? The system is somewhat dependent on the blockchain being successful. You can see it is successful without it. We currently have been on a blockchain that hasn't been highly successful, and we can still thrive. What you have to imagine, what does this system turn into if this blockchain is remotely successful? Right now, our web has roughly $15 million in liquidity. With just a 10x of the blockchain, we would have $150 million of liquidity. And that's for the users of the protocol. That's more on-chain liquidity than some of the biggest assets that exist in crypto today. That's more than Shiba Inu's on-chain liquidity, for an example, by a lot. And 100% of that liquidity is actually used to generate revenue. And that's where we're getting these numbers from. And we have 2 years of data to create these numbers off of. Keep going, Banana, sorry.
Okay, I just want to back up. So the fees, you see right over here, the 24-hour fees collected, that's broken down here. And that's from the 5% transaction fee that users are paying and AMM bots are paying as they go and they equal out the pairs. There's a question. As I'm new, I don't plan on staking or farming for some time, so I'm more interested in the basics of the coin and where it is likely to go in this cycle. We'll talk about that when we get into the moon math section. Another question. Excuse my ignorance. If I have confidence in the blue chips on Pulse, why wouldn't I just invest in them rather than pTGC? Let's get into this in the slides, which I think we're going to next. And then this question here, pardon my ignorance, pTGC is linked to PLS. If Pulse goes up, so does pTGC. Yes. Is there ever a time when Pulse, PDI, etc., all the Pulse-related coins go down while others go up? So what will happen to pTGC, I think is what they're asking. You want to answer that right quick, Zen, before we go to the slides?
Yeah, so if PulseChain is going down, that usually means value is leaving the market, leaving PulseChain as far as an entire market. You can actually look at PLS's price. When it's going down, that means literally money is leaving PulseChain. And when it's going up, that means value is coming into PulseChain. Usually when value comes into PulseChain, all sustainable assets that aren't just rugs and dead tokens go up with that. When value starts leaving the blockchain, most assets go down when value leaves the chain because it also leaves some of those assets and everything's bonded to the gas token as well. There is sometimes situations where you can trend up against the blockchain when it's going down, or you can trend down against the blockchain when it's going up. And this is from human sell pressure and buy pressure. pTGC has actually trended up against PulseChain and against a lot of the assets on chain as they've been going down due to its sustainability, product market fit, and the mechanics that we've been talking about as far as like buy and burns and stuff like that. Since we're not only reliant on the human interaction and we have a lot of mechanically driven systems within our protocol, it helps us actually swim up against the current when the current is fighting the whole entire market.
Okay, perfect. Let's run through the slides. I'll try to make this quick. So this first one, let me show these on the screen here. This one represents how pTGC and UFO are an index. You have pTGC and UFO in the center, and then the core assets along with other blue chip products on the outside. And then pTGC and UFO are linked or bonded with these assets, but they're also bonded to each other. As a matter of fact, pTGC and UFO's thickest liquidity pair is with each other, and the second one is with Pulse. And this next one breaks down how the fees are distributed. 2% at the DAO, 1% to holders, 1% to stakers, and then we burn tokens. We burn PLP tokens. UFO, 3% goes to LP providers, which we just showed on the dApp. 1% goes to holders. I'm going to caveat on this one because we found that the holders, because UFO tokens that are in LP do not earn reflections. The holders recently have been earning about 5 times more APY than people that are in LP. 1% burns UFO and 1% burns pTGC. So pTGC holders love UFO because it burns pTGC, and it can burn a lot of pTGC. UFO can. Now, pTGC has a superpower, and it is that of the 5% fee. And this is the reason that this token has been referred to as a forever up token, because of the 5% fee, there's 3% that goes into the system and 2% that can be extracted. If you see in the green, 5% goes to LP, 5% burning tokens, 2% goes to the DAO. That's all going into the system, but only 2% can be extracted by the holders or the stakers end. We have some very diamond-handed holders.
Can I just pause you for a second?
Yes.
Would you mind hopping back to that previous slide?
Mm-hmm.
Just in case the people are not fully aware, LP is liquidity provision. So that's I've just wanted to make sure people understand the acronyms. Burning the token means that the token is no longer in existence. So you've got less and less tokens existing, which means that it's getting increasingly rare. Correct me if I'm wrong here.
You're on spot.
Just want to make sure
yes.
it's real simple. And the DAO is a decentralized, what's it? Decentralized autonomous
organization.
Yeah. That's it. That one. Exactly. And it's important to understand why there's that there. So if you can give a very quick explanation, like 10-second explanation.
Sure. Okay. The DAO also is decentralized. It has no admin keys. Decentralized autonomous organization. A lot of DAOs are not technically really decentralized. This one is. It's comprised of everybody that is a staker. The top 100 stakers can submit proposals and almost all the proposals are to burn tokens or to add LP. All stakers can vote on proposals. They got to pass by a 65%. And so you got 5% fee, 3% goes in, 2% at most can be extracted.
Yeah, I kind of want to chime into that real quick. The design of the fee structure, even though even the APY comes from value generation, so a lot of people don't realize this, that a lot of other systems that pay you APY, they're paying you out from inflation of the currency, right? Which if there is lack of demand on that product, that inflation equals down pressure, sell pressure on the chart, where our system actually has to generate the revenue first before it pays it to you. So it's a buy on the chart and then it's paid to you. You could then decide to make the sell back into the chart if you want to take profits with your APY or whatever, but you don't have to. But it's not inflation to the currency. The currency is actually fully deflationary. It's through value generation. So it's value that we generate and we actually get to buy up our supply and then pay it out to you. Even if 100% of the people sell all their APY, we have the system designed to where even if 100% of the people sell the APY, we still have more value going into the system that constantly keeps the floor rising, because there's 60% going to buy and burns and LP ads and 40% of the fees going to APY for holders, which helps create a sustainable long-term system. Okay.
Perfect. Next slide. Have a look at this one, guys. This slide did end at the end of January, and I just got an updated one. It was so beautiful at the end of January. We know what's happened since January, like almost nothing. So I was very hesitant to get a new one. Nevertheless, yesterday, in anticipation of this presentation, I reached out, got a new one. And let me show you what it is. It's pTGC and UFO, and you can see the gold and then the kind of blue. And then down here, you have the core assets, Hex, PulseX, Inc., and Pulse. Look at the exaggerated upward response in pTGC and UFO on any upward trend of the core assets. That's wonderful to see. But then look over here at the right, how the core assets went sideways and how they even went down. Yet pTGC and UFO are still performing so much better. Right? I told you guys, we're going to get it.
It's working off of an X multiplier. So since we've indexed ourselves to the core assets, we automatically get all the up and down movements from those assets. And then if we get more value flowing into us, and that value can come from human interaction, buyers, right? But it also can come from our mechanical value generation system, so our utility, and that utility helps us trend higher when either times are flat or when value starts flowing into the chain, because we have pretty good product market fit, sustainability. Users find pTGC being a good resource to store value in, and that's why when Pulse goes up, you can see on this chart with 2 years of data, it amplifies our system that much more, right?
Thank you for that. Now we're going to get a little bit playing with these slides. We're not here to, to put down other tokens, and we just don't do that in the grays. But this is a little bit of a private setting, so I thought we could, sort of allude to some of that. So just so you know, we love Richard Hart. We love all the core assets. We are bonded to them. We have burned bucket loads of their tokens, and we're depending on PulseChain and the core assets to run, so the Grays currencies do very well. But we're just, for sake of illustration, we're going to get a little bit illustrative. So here we go. Well, first we're going to, with this slide, you can see pTGC and UFO versus Bitcoin, Solana, and Ethereum. I'll just kind of bounce off of that one here in a second. Now this is a market cap comparison. pTGC, UFO, and then many of the core tickers, I just kind of masked them, if you will, just for brevity. Now, but I will explain that I'll tell you that the second one is PulseX, and you can see the performance, and you can kind of guess the other ones down here. I threw another one in there just to cause a little bit of confusion, but that's more of a slide that I would share more publicly. But the other ones are going to get a little more juicy, I think. Okay, this is the Grays. It's titled "The Grays Leaving Others in the Dust," and this is pTGC, UFO, Hex, PulseX, and Inc. Against Pulse. So, what you can do to replicate this in your own DEX screener is look at the chart not in USD, but in PLS. You'll see up in the upper right, you see a USD and then slant PLS. Select PLS, and then you can see the token in terms of PLS. So pTGC in terms of PLS is up from the second week to the all-time high, and we're below all-time high right now. It's up 7,110x. UFO up 366x. Hex is up 2.7x. PulseX 2.65, and you can see Inc at 0.4. We're not bearish on those core tokens. We're just saying
that's the important thing to realize is how our system is set up. If these assets we're connected to are successful, they make our asset even more successful. It equals more price appreciation, it equals more liquidity, it equals more volume and more value generation. So by the success of the assets we are connected to, by the success of Richard, we become a lot more successful. But then we also have the ability to be successful on our own in the chance, which I don't think is a chance, that they don't do much this cycle. I think they're going to be very, very successful this cycle, and we're going to reap the reward of that within our system. You're muted again, Banana.
Okay, thank you. This next slide is pTGC is outperforming the core assets. So pTGC, of course, against WPLS is up 7,110x, but it's also up against PulseX 425x. It's up against Hex 970x, and up against Inc 50x. And again, that's from the second week to the previous all-time high. Now, this is an illustration. This is a pretty heavy slide here. Between August and April, it's a little dated, but it's a snapshot. It's a good chunk of time snapshot of pTGC versus PLS. Between August last year and April this year, PulseChain volume increased by a 3x, whereas its price dropped 38%. pTGC's volume increased 8x, and its price increased 533%. So we can only guess what is going to happen to pTGC and UFO for that matter, because they're tightly bonded, when PulseChain runs. You know, we do a little mind experiment here, where we set the volume at $10 million of volume on pTGC and UFO for an entire year. If we did that, if that were to happen, and we decided to just focus on burning pTGC tokens between UFO and pTGC, how many tokens would be burned? Well, we could burn $128 million worth of tokens. They would all go to the dead address. And how would that happen? Well, 2% goes to the Dow. That's $200,000 a day.
And real
0.5
quick, Banana, before you go on,
Sure.
roughly right now, our average daily volume is 350K. So what we would need would be roughly around a 7-8x to the gas token, to PulseChain, our base token. So if PulseChain goes 7 to 8x, these numbers of 10 million daily volume can be really, really realistic, because a lot of our volume is mechanically driven from our liquidity web. So if we increase our liquidity web by 8x, that means market makers need to move 8x the value, which then creates the scenario where we are mechanically around $10 million in volume a day. So where we're getting at with it is these numbers to hit are not guaranteed, but we've actually mechanically created simulations of how we can achieve them in the future. It's roughly with a 7x of the gas token that we're connected to, which is not that much.
Okay, perfect. And I'm going to get back to that. We'll finish that slide in just a second after I address the question about the claim of 530% up August to April. Is that August 2024? Yes. To April 2025? Yes. My little bag is down quite a lot. Interesting session, though, and grateful for your time. You're absolutely welcome. Thank you for the question. So my argument for this is that, like, although we could do this is just a thought experiment. We could do this, we probably wouldn't. But if we had $10 million of volume on pTGC and UFO, that economic energy is going somewhere. So I put $128 million into this calculator that we're going to, part of the calculator you're going to see tonight. And it would send, if there was a $128 million purchase on pTGC today, it would send the price to like over 50 cents. So it kind of stands the reason if we have that kind of volume, we're probably going to have, prices in that range. Would you agree with that, Zen?
Yeah, and I just realized I used the wrong numbers a little bit. We need more than a 7x on PulseChain. I think it's more like a 30x. So I just wanted to clarify that real quick to get this $10 million of daily volume. Sure.
Oh, perfect. Okay, next slide. Okay, this is the superpowers. Might be a little bit much for the audience.
Skip that one.
Skip it. Okay. And I think that's it for the slides. But this is where I think the machines are. This is where I was going to end my slide presentation. pTGC and UFO are like they're two finely tuned machines, and they're like a Lamborghini at the stoplight. Right now, they're barely revving the engine, but when PulseChain runs, this is what it's going to look like, guys. Let's go to the calculators. Is there a particular one you want to start with, Zen? Let's just do the price, pTGC and Pulse. If anybody wants to drop in the chat, what do you think Pulse can do, or maybe even Ants and Della? What do you think PulseChain can do this cycle in X?
All right. I like this question.
Okay.
All right. So we're talking from the bottom of Pulse, or we're talking from
right here? From right here.
Yeah, okay. That's where the calculator starts.
Okay. This is my personal opinion. Don't listen to it, really. But I'll be pissed off if it's not, a pretty high number. If it's 30x, that's really disappointing. It's like disappointing cubed. And if we're at like 100x, I'm at disappointing squared. And if we're at 1000x, then I'm starting to, I'm like getting pretty happy. Like that.
I like it. That's right where I'm at, man.
Yeah. So 1000x from here is roughly like a 300x from SAC rate, right? That's where you're shooting.
Yeah.
Yeah. Okay. So we need to add an X multiplier in there. You see this X factor, and that's how many X's pTGC is going to do while Pulse is running 1000x. Okay. And just to give you some idea, from year to year, from like today to last year at this time, pTGC has done a 25x against Pulse. And we could put that number in there in that field, but we're going to be modest, and because it makes it really crazy. Because I'll tell you guys how to do this formula. We'll just put in
and keep in mind with this, we've been able to do a 25x against PulseChain with value leaving PulseChain for the last year. You have to keep that in mind, that there isn't any new value in PulseChain. So when PulseChain is up 1000x, think about it. There's gonna be new value in PulseChain for the pTGC ecosystem to technically tap into as being a store of value on chain. So again, the fact that we've done a 25x against PulseChain with no new value, I think is very ridiculously modest, because when value starts flowing into the chain, we've seen what that actually does to pTGC and UFO. So what Banana is saying is a 10x is like nothing.
Yeah, it's modest. I mean, we don't need to put in big numbers to make this thing go really crazy, as you'll see. So the 10x, just so you know, the formula is 10 times 1,000 times the current price. Okay, so that's 10 times 1,000 is 10,000. Now multiply that times the price. And by the way, side note, we're working on hopefully making this site free for everybody. And it's lookintoptgc.com. It's a fabulous site. So we're going to calculate, and let's see where PTDC right now is at 3044. It would send the price to, wow, $4.45, 10,000x.
So this is my big thing, is a lot of people don't realize this on other chains, but every single token on a blockchain is working off of an X multiplier, right? And yes, you can build on ETH or Solana or BNB, but those have already done hundreds to thousands of X's. So you've already missed out on the easiest X multipliers. Yes, ETH could do, let's say, a 10x this bull run, and you will be working off a 10x X multiplier. But the unique opportunity that pTGC and UFO have is that we built a full-blown DeFi protocol at the bottom of the blockchain with millions of dollars in liquidity, with actual sustainability and actual value generation. So we actually do have the ability of, like you said, PulseChain can do 1,000x from these levels. And it actually takes very little amount of capital to do that, or positive value injection into PulseChain. So like with sellers as well, you have to get like $100 million into PulseChain, but really that's relatively small when you think about a successful blockchain. What I'm getting at is the amount of opportunity you have with pTGC and UFO on PulseChain is really unique, because you're working off of a massive X multiplier. With just PulseChain going 300x SAC price, you're looking at a possible 10,000x for pTGC, and that's very modest. Where that puts pTGC as far as a token goes is insane, because if you just 1,000x what our liquidity is today, because that's what you would do naturally, what pTGC would have as far as of a liquidity web, which currently right now we're around $15 million, times that by 1,000. This is literally pTGC moving up nothing. We would have $15 billion in liquidity.
Okay, I just want to play devil's advocate here for a second.
Go ahead.
So there's sort of two aspects to this. Some people got into this token really early and they hold massive bags. Can they destroy the ecosystem by selling? Because I'm pretty sure that they're going to sell out of their positions. And the second question is, at some point we're going to be in a bear market, and we've got a system that's based on amplification, but that amplification goes up, but it also amplifies going down, in my understanding of the system. Could you talk to those points, please?
Yeah, the first thing with the user base, right? This is one of the only systems that really incentivizes their holders to hold long term. So you're literally paid to hold up the token's price, and the token is hyper deflationary. So even with Bitcoin, right, you can hold Bitcoin, but it's not paying you APY for holding Bitcoin. And then you also have to worry about the miners constantly selling on you as they mine the inflation of the product. So what we created is a hyper deflationary system to where if you just hold the product, it actually is constantly becoming scarcer and scarcer behind you, making it more sustainable. And it's paying you. Yeah.
I hear that, but my question is more, I'm pretty sure they're going to sell, and you're saying if they hold. And so my question is, what if they don't hold? And is there actually going to be a massive drop in value in the system?
I think a lot of the ones that we're going to sell have sold, right, for one, and you can see that the machine has absorbed them no problem because it has the mechanical features to buy them out of their positions. This happens every single day. I think you could actually look at most assets on PulseChain or even on blockchains and ask yourself, has this community actually been tested in X's, right? So you can look at many tokens and say, has this community actually been up in profits, and what do they do when they're up in profits? We've actually tested our community in hundreds of X's, and for the most part, they believe in the system long term, and I think they believe they hold a premier store of value, right? A better store of value than anything else that exists. So by holding the asset and just letting the asset pay you long term, and like you said, 1,000x on PulseChain, the amount of APY they would be receiving would be more than enough value than they would need. And yeah, they could cash out their whole entire bag, but then for one, they'd have to pay taxes on that whole entire bag for the most part. And then for two, to go into what? If this actually proves to be a better store of value than everything else that exists, and that's what it's been designed to do, they would be actually leaving a better product into a worse product, and I don't see that happening. But you're 100% right. There is going to be a sell-off in the future. This is, of course, when you put people in profits, a 10,000x, you're of course going to have sell pressure, but you have to also realize when we are, let's say it is 10,000x up and our value generation goes up 1,000x, we'll be able to absorb a lot of this due to our utility. So right now we have $350,000 a day in volume. And if we times that by, let's just do 1,000x, you're at $350 million a day in volume. And then let's say you times that by 365 for a year. How much do you generate in a year? You are at $127 billion of volume. And then we only get 5% of that, right? Because that's our fee on that. What we would be able to generate is $6 million of value generation just in the pTGC system. 40% of that goes to APY. So for an example, let's do times 0.4 equals. So that means $2.5 billion would be paid out in APY. If you were a whale like you're talking about, and let's say you held 1% of the supply times 0.01, you would be receiving $25 million a year to hold up the price of that asset. And that APY that you're receiving is actually backed by real value going into the chart. And that asset that you're holding is becoming more scarce every single day. So of course you can take profits with your APY. It would be $25 million at that point. But all that APY is backed. And the asset that you're actually holding is becoming more scarce behind you. And of course, some people will sell their whole entire bag, but there is more incentives with this asset to hold than 99.9% of the assets that exist to date. And that's the reason why I think a large portion of them will decide to hold. But then even the mechanical features for the people who do sell, because we haven't had a lack of sellers, right? We've been one of the only successful products on PulseChain. We've had plenty of people taking profits, but since the machine is so strong, it buys those people out of their positions and then sends the tokens to the dead address to never be sold again.
Yeah, perfect. You know, who wants to sell the golden goose that's laying golden eggs? You sell the eggs. That's the goal. There are going to be sellers, but they might be sorry.
Yeah. Too. So, and then what you're saying, the positive, and then there's the negative, right? We get the X multiplier on the way up, but there also is the effect on the way down. The best data I have to look at is what PulseChain has been since we've launched. So since PulseChain has launched, it's gotten down to really low levels and has actually done like 10x moves upwards. and then hit lower lows, right? And then it's gone up another 5x and then hit new lower lows. But even with the blockchain that we're built on hitting new lower lows, pTGC has constantly hit lower high or higher or lower highs, right? So we're constantly moving in an up direction, even with the blockchain we're built on constantly moving in a down direction. What I believe is going to happen this cycle is I think PulseChain will finally move up, and I don't think it's going to lower lows in the next bear market. I think it's going to land at a higher low, which then makes it to where pTGC lands at a higher low as well. Of course, there is the possibility that you sell the top and then you can buy back the bottom. This is exactly what our code is designed to do the entire time, and you could try to swing trade that stuff. But for me, I didn't design this product for traders. I designed it for long-term holders that actually believe in the code being a premier store of value long-term, knowing that the code and the product market fit is working with you the entire time.
Okay, we have two more calculators to run through. We'll go through the reflections calculator. What we're going to do is we're going to put in here 100 million pTGC. So say you're holding 100 million pTGC. Let's say you even have it staked and locked, but you're earning reflections on that 100 million. The volume of the network is 10 million for this particular scenario. And so your APY would be 27.62% based on that $10 million in 24-hour volume. So your yield would be, in today's terms, would be 75,000 tokens, or $33.70 worth of tokens.
Yeah, and keep in mind that's just for holding. If you're staked and locked, which usually APY people are, you're earning roughly 200% more than that. So you're around 70% APY.
Perfect. Let's go to the locking calculator. This is my favorite one. Remember, locking pTGC is the superpower of pTGC. There is a superpower for UFO. I go over it in my presentation twice a week on Sundays and Wednesdays. Jump in to my stream on that Prairie Banana. I go through the whole ecosystem twice a week. So this is the locking calculator, and this is for you. How do you say it? Aussie hexagon.
So I think it's Oz hexagon.
Oz. Okay. So this is the amount of pTGC that is locked globally. This is how much is unlocked, at least for the last year as an average. We've been tracking it. 395 million unlocked, like early unlocked, people paying the penalty. And then what you can do is you can put in your locked pTGC right here. We're going to put in 100 million. That is 3 dolphin positions. And what's cool about this calculator is you can forecast the price, because it's not a superpower if it's in today's price. It's not very exciting. Let's put in what price do you want to put in, Zen or Ant? Do you guys have a price you want to put in, like a future price for?
Put in $1 pTGC, because at the 1000x we were far past that with the X multiplier.
There you go. Okay, so we're being modest on top of modest. That's $1 pTGC, 100 million pTGC bag. He's going to be an average of 95%, because the worst you can do at locking is 55%. The most you can do is 100%. And so there's an average in there. Like my locks, I'm 98% locked, but I have a 96% score. So we're going to give this guy 95%. So he's taken an average of 95% of the locking rewards coming to him to his wallet. Now watch. And he's got a ladder. So every year he has pTGC that he can unlock if you want to. So he would earn, in this 30-day scenario, remember this 395 million is a 30-day average. He would earn $81,000 for that bag of pTGC at $1. And let me tell you, we got smart people in this ecosystem, and they think that we're going to be waving goodbye at 10 cents on our way to that number.
Yeah, that's one thing that you kind of have, like these numbers with the X multiplier. What we are predicting is a successful blockchain, right? And that was kind of what you were saying with, I believe this blockchain could do 1000x from here. What we're illustrating is, if this blockchain we're built on is a successful blockchain, is 1000x from here, what it does is it actually turns this machine on more than anyone actually realizes, because it's literally just code running constantly, making the supply scarce and adding demand to the protocol constantly. So even once we do 1000x, if people want to sell into it, the machine actually increases its value generation somewhat evenly, helping to absorb and make the growth more sustainable. Most products that exist that people hope do 1000x don't know how to even do that 1000x. And even if they get there, there's no reason for the holders in that asset to hold, because the system isn't deflationary and there's no value generation and there's no APY giving the users a reason to hold. If there's no APY for the holders, the only thing they can do is sell the asset after that 1000x. So to give you kind of the answer in short is, you can never stop completely anyone from selling after 1000x, right? If they held for 1000x, that's pretty impressive. But what our system actually has been designed to do, to give them incentives for actually supporting the thing that actually supported them, right?
Okay, perfect. Ant has an engagement he's got to get to, so we should probably talk about closing it down. It has been fun.
Yeah, look, we could go on, and yeah, I want to say I really appreciate everyone's time, presenters, audience. That's really cool. Everyone's been chipping in. There's definitely some more resources that you can check out. Prairie Banana's just saying that he does I think twice weekly presentation on the ecosystem. There's tons of information out there. Maybe you can share some links in the chat right now of where people can go to for that information. And also you can share that with me privately, and I'll get it out to the groups that I'm in. I've got one question for Zen. Okay, bit loaded, but you know, the question is, are we still early?
I personally believe it's early, right? We're only 2 years into a system that I've designed in a way to be multi-cycle. One of the biggest indicators for me is every single time PulseChain has been at these lows, pTGC has done new highs as PulseChain has increased afterwards. I do think this next move up of PulseChain will actually be its largest, which then should make pTGC the largest as well. That being said, there is risk involved with all these things, right? If this blockchain isn't successful, we won't probably get to see the full design purpose of this system. But what it's been designed to do is redefine how assets actually exist on chain, and it can be drastically amplified by the success of this blockchain. The other ways they're amplified are just with time, right? If this blockchain isn't successful, time will do its thing, and we'll be able to see how this thing evolves with 5 years, 10 years, 15 years. But with the successful blockchain, it adds a massive multiplier to the system, and it kind of flash forwards the people who are involved. If you're not involved, the price can technically just run away from you really quick. And if it does evolve into the item that it's meant to be, the idea of it is eventually for it to be a true store of value where people can park very large amounts of value, have sustainability, price appreciation, APY, and scarcity. Mostly everything users are looking for in a place where they store value. The unique opportunity right now that we have is we haven't done the X's yet to that point, right? When Bitcoin came out, it wasn't a store of value the first couple years. People were speculating on it turning into it. This is the opportunity that we're at right now, is you need to make the decision. Do you want to speculate on this code, this liquidity, this system, this machine to be one of the next premier stores of value on chain? There is risk involved, right? We were just going over that. This chain might not get the adoption that we believe, but the simulations that I have ran, and I do VCs, I do spaces. If anyone kind of wants to talk more in depth on any of these ideas with me, I do it 6 days a week. I believe if this blockchain is successful, I've mathematically designed a machine that creates sustainability and price appreciation over the long term better than Bitcoin. That being said, we could be on a blockchain that doesn't get adoption. In our lifespan, we might never get to see what this machine evolves into. But with the success of the blockchain, that machine can get turned on in a matter of weeks, days, months, however long it takes for PulseChain to do those X's that Ant was just talking about.
We're early because Pulse hasn't run yet. It's still below SAC price. We've done all, pTGC and UFO done all this performance while PulseChain's done this. Nothing. So we're effectively early. Yes, we're effectively early.
And I get what you're saying, right? Is it as early as the people who got in a year and a half ago? Absolutely not, right? But they had a completely different risk factor, and the machine wasn't the machine it is today. There wasn't the liquidity that there is today. There wasn't the holder count that there is today. There isn't the distribution that we have today. The machine didn't have 2 years of tested product, mechanically working perfectly. Obviously, there could have been code issues, so on and so forth. But 2 years in, we feel pretty confident in the machine. We feel pretty confident in our holders. The holders have actually been tested. The machine's been tested, and we have 2 years of data to work off of. Again, 5 years from now, it'll be that same thing, right? You'll look at the people who got in that 2 years and say, wow, that was early. That's what we hope, if this is successful. But 5 years from now, the people will have a completely different set of analytics to work off of. Instead of there being $15 million throughout the web, there might be 1 billion, 150 million, right? So that's a completely different kind of a product when it's at that class than it is today. So you kind of need to look at the product that it is today and say, what is it? Like, it's trying to evolve into a premier store of value. Right now, there's still a lot of X's in the game. It can do a lot of X's very, very quick. That being said, there's still risk involved.
Okay, awesome.
Yeah.
Well, guys, I need to jump off. I've got a fun function that's coming up. You too.
Yay. Enjoy your weekend, guys.
I'm gonna. Thank you so much for your time, everybody.
Yes.
Thank you, Ant. Thank you, Della. I appreciate
Do
it.
you want to share those links in the chat? I'm not actually on that chat right now.
I'm going to share I'll share links in the WhatsApp to you guys if you want.
Yeah, cool.
Right after this.
And the Telegram address that you just gave us, Prairie Banana, is that the gold icon or the icon that's showing currently right now against Zen's name? I went into the Telegram, popped in that address in the search function, and it comes up with a whole lot of choices.
Okay, it would be it shouldn't. Boy, it should. I'll double check. I'll send you the good one in WhatsApp.
Okay, cool.
Yeah, there shouldn't be a lot of choices. There's only one Telegram, so make sure you're in the right one. Be careful if you hop into another Telegram. We're not asking for your seed phrases or anything, so don't be giving them away. That being said, we do VCs all the time in there. It's a great place to go and ask questions and learn about the protocol. Banana also does his live streams twice a week that are recorded. That's another great place. We do spaces. So pretty much 6 times a week, technically every day, we offer a live place to where you can get your questions in on the spot with either me and Banana. So if you got questions, it's okay. Write them down and bring them to us, and we're here for you.
Okay, wonderful. Thank you very much.
Fantastic. And I've popped, Prairie, your live chats every week. I've popped that into our pTGC 19th of July signal group, everyone.
Oh, perfect.
For ease. Okay.
Thank you. Thanks, everybody.
Cheers. Thank you so much.
Bye-bye.